This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back to the Research Talks podcast with Alan Green. It's good to be speaking to you again, Alan. We're going to be talking about Marula Mining and Conroy Gold today. Of course, Conroy had very significant news, and Marula always seem to be advancing with what they're doing. So which one are you taking us through first, Alan?
Let's talk about Marula first, okay. Mark. Of course, Marula currently listed on the Aquis market, and I noticed, I think it was smudged down on Twitter the other day, just said, this is an Aquis stock, which is really, really delivering. And boy, have they delivered. And I think a lot of investors can look at mining companies that have listed recently or are in the process of listing, and you can learn a lot from the way those companies manage their news flow and also manage their project developments, because it's all about the story. It's all about the growth proposition that you're selling to investors, and of course the long-term plans for the business. And I think again, what we've seen is that companies come to market at a modest valuation, and then upsell on that. Investors see great value for money, and of course they see the value in the company increasing as each deal is done. So of course, Marula. The share price is currently trading at 8.6p. That's pretty well an all-time high. Of course, when we last spoke, it was around the 5-6p mark, and it's drifted back a bit. And then all of a sudden, on the news that came out recently, the share price rocketed up again. So in summary, firstly, the company's key asset or key asset for near-term monetization is the Blesberg lithium and tantalum mine, which is listed or located in the Northern Cape in South Africa. This is one of the largest pegmatite deposits in the regional belt, and there is a historical production of spodumene concentrate, which of course is the source for lithium and also other metals and minerals such as tantalite, feldspar, bismuth, beryl, and so on. What Marula have done with Blesberg is to undertake analysis on the previous data from the area, and then of course introduce funding and financing, and the company is seeking to establish a bulk sampling and pilot plant at the Blesberg mine, which is now underway. But of course, in order to do that, they needed to raise some financing. The first round of financing, 5 million, was secured from South African commodity group Traxys, to purchase the high-grade lithium that is at Blesberg. They've already received the first payment of that, and of course Marula are running this with their partners Southern Metal Processing, and they're going to use 1.7 million to increase their Blesberg ownership to 100%, which of course has been done now, and they're expecting to make first sales early in Q1 2003. So the company has raised money back in October, raised 450,000 at 2p. Also issued a 265,000 pound convertible loan note to Brahma Finance, and it's in talks with a couple of other African funds to raise further monies. And of course, that was back in October. Then, of course, the raft of developments and heads of terms and joint ventures commenced. Heads of terms were signed with Tequila Mining in Tanzania on the August 4th to secure a 49% stake in the Kanusi copper mining project. That's 10 copper mining licenses in Tanzania. And again, the samples from that region showed very strong grades. The there were grades of up to 31.3% copper using a portable handheld XRF device. And Jason, of course, Jason said at the time that it had the potential to be Marula's second operating mine. Since that time, of course, the company has just announced it has increased its stake in the Canusi copper project to 75%. That's going to cost Marula a further $550,000. And at the same time, it's also signed heads of terms again with Tequila to secure a 75% interest in the Nyayanori graphite project, also in Tanzania too. And of course, we know with graphite projects, the process that has to be gone through to test the graphite, test the total graphite content, to ensure that it's suitable for inclusion in modern technology. And of course, that is mainly the lithium-ion battery. And graphite, of course, takes up some 40% of the weight of your average lithium-ion battery. That's going to cost a further $400,000 to secure those licenses. But then, of course, the money has come from a subscription agreement which was announced at the end of January, about 3 weeks ago, with South African commodity investment fund Q Global. This is run by the Quinton van der Berg, who's very well regarded. And Jason said at the time, of course, it's a transformational deal. And what it does, it removes the funding risk and forward funding risk from Marula's projects, and it will accelerate the growth of the projects and so on. So this is very much it was very much a pivotal moment in Marula's history. And then of course at the outset Marula's now got a complete portfolio of interests across the battery metal spectrum. That's lithium, graphite, copper, niobium, tantalum, and of course some exposure to rare earths as well. That's head of terms also signed with the Tanzania company, the Casino Gateway Group, for a 73% interest in the Bagamoyo graphite project. So there's a real cross section of exposure to battery metals here, each of which is going to be fast tracked. And I sense that the pace that Jason moves at, we're going to see a very rapid resolution and development for each of these projects. So I know you've interviewed Jason Brewer on a number of occasions, Mark, and he's spoken about the pace of development and how things are progressing. But I think also we're seeing recognition of this from the wider investing community in high net worths. In December, of course, the investor Paul McKillen increased his stake from 5.8% to 9.3%. So an awful lot of people backing Jason's vision and view for taking this forward. So processing, of course, has now started at the core asset, which is the Blesberg mine. The stockpiles are being crushed. Equipment is now on site, and the infrastructure there is very well advanced. Stores and workshop are now based in nearby Steinkopf, and the company's taken on 30 new local employees. And of course, as we said already, Maru has taken up the option to buy to buy 100% of the Blesberg asset. So the pace of work already, or the pace of development already, if we think, we were saying this before we came on air, Mark, that if we think between Christmas and New Year, there were the development and the news flow really started to hot up. Since the new year, Jason and the team have just really hit the ground running. Marula is transformed from the mining company it was a few months ago. It's now really a very broadly based play on battery metals, new energy metals across South Africa, with a producing asset already in the bag at Blesberg. And I think this is the key to producing or building a successful mining company, you've got to have the blue sky potential, and that of course exists in these assets. With Tequila Mining in Tanzania, the Kanusi copper project, the Nyanuri graphite project, and the Bagamoyo graphite project as well. But that's all cornerstones, if you like, by Blesberg. Blesberg is the producing asset. It's generating cash flow, and I think that's the reason why some of these big high net worths are getting involved, because they've seen what the company or they buy into the vision that the company are building. And certainly Quinton van der Berg has bought that 3.7 million in, and that's I think shareholders can be very excited about that, because what that should mean is there's going to be 100 million shares issued to Quinton in due course as that money comes into the company. But there's visibility with that. There isn't the prospect of another sudden fundraise in the near term, because the funding is already in place. So the level of dilution from those shares being issued is known. But of course, when those shares are issued, the company is going to be much further down the road, have many more assets under its control, and will be worth an awful lot more. So that's the secret to building a successful mining company. And I think Jason Brewer and the team have done a fantastic job to date. Of course, the challenge he's got now is maintaining that pace of development and that pace of news flow. But I've no doubt, having spoken to Jason on a few occasions and seen him on the interviews, the guy is a bundle of energy, and I'm sure he's going to drive this a lot harder. Of course, the company have also announced their intention to list on AIM as well. And when the company does list on AIM, Quinton van der Berg will become chairman of the company, subject to the normal due diligence checks and all the rest of it. But that's investors should be very excited about what the company are building here in South Africa.
Indeed. Well, thank you very much, Alan. That's a very nice synopsis there of Marula. And you are right, Jason Brewer is definitely got his skates on. He's always developing that company and bringing in different projects, looking for that near term cash flow, with then the view to actually go and explore for more of the hard rock that might be there to actually get more resource out. But let's see how he goes with it. He's certainly blazing a trail at the moment. So I'm looking forward to seeing how he can continue to do that, get that cash flow in, and then ultimately start building some more significant footprint and operations there. Because he's said multiple times they want to have a pretty big footprint, let's say, or they want to be a big producer in Africa for some of these commodities. So that's pretty big ambitions. So fair play to him for cracking on with it. And the guy doesn't seem to stop.
He doesn't, and that's the secret. It takes an awful lot of energy to build a company. It's a relentless process, and I think Jason is fully prepared for that. And the way he's executed on his vision already since the start of the year. I mean, we're not even at the end of February, and this company is transformed already. I mean, the market cap is still really only 9.2 million. So you consider those assets as it already has under its belt. It's got a producing asset that is raising money. That's the Blesberg mine, and then of course the Blue Sky projects too. But I've no doubt that along with Quinton van der Berg, the two of them together will be looking at many more projects out there and adding many. There may be some assets there which they can fast track and bring into production, so they could maybe add a second Blesberg into the mix, or as was said earlier, of course, there's the prospect that the Kanusi copper mine could be Marula's second operating mine this year. So if they can fast track Marula with the resources they now have at their disposal, the sky really is the limit. So yeah. And I think once it lists on AIM, of course,
indeed, the AIM listing, is a big.
It will attract sort of interest from funds, and obviously the liquidity will improve as well. And we could well see that valuation double in very short order.
Indeed, yeah, I think that transition over to AIM, which Jason has said that it's going to be pretty seamless and without too much trouble. So hopefully that does go ahead without too many things getting in the way and slowing it up. But that will be a big difference when it moves over to AIM for sure, because yeah, a lot more liquidity there over on the AIM on the main market. Well, the AIM segment of the main market, yeah, a lot more liquidity. So let's see. So thank you very much, Alan, for that. So let's talk now about Conroy Gold, of course, having some pretty significant news recently, haven't they?
This is another interesting case in how sentiment can change on for a junior mining company. So the company's had these assets for some time, but I think as the exploration, the drilling, the sampling goes on, we're just seeing evidence that both the Clontibret asset and also the Clay Lake asset are developing into, much larger than previously thought assets. And of course, Conroy Gold is run by Professor Richard Conroy, who's a veteran in every sense of the word, but still seems to have the energy of a 25-year-old. He's an emeritus professor of physiology, and of course, the team that works with him are well-seasoned geologists. But the key assets, or the core assets for the group, are in Ireland, and they're right on the border of Northern Ireland and Éire. Clontibret, of course, is just to the southwest of the border, near to Killyboley, and then of course you cross over into Northern Ireland and Keady, and you've got Clay Lake, which is northeast. So that total distance, I suppose, between Clay Lake and Clontibret, it's about 4 or 5 kilometers in total. But it's part of a much bigger gold trend, because the assets owned by Clontibret have been worked on for some time, and of course they're a couple of years ago at the Clontibret mine itself, a JORC resource of 517,000 ounces of gold at 2 grams per ton was established, and then of course the exploration work continued. So Clontibret, as I say, is just southwest of the border, County Monaghan, and Clay Lake in Armagh, just over the border. And there's also the Slieve asset owned by the company, along with interest in Finland, in the Lapland Gold Belt, which is in a deposit area close to the Katila underground gold mine, which is one of the largest gold mine deposits in Europe. But for Conroy themselves, the challenge up to the beginning of last year was securing a partner to work with. And initially, of course, it was thought to be Anglo Asian Mining. That was then abandoned, and shortly after, the company announced a joint venture with Turkish gold giant Demir. The terms of the investment were established last year for phase one, to develop phase one of the development. A 5.5 million euro investment would be made for 25% of the Clontibret asset. That was 25% plus costs. Phase two, a further 4.5 million euros plus costs for a further 15%, so it takes out to 40%. And then, of course, phase three, whatever additional funds needed to get Clontibret to construction-ready status. And of course, that would take them up to 57.5% in any one of the three joint ventures. And that, of course, includes the Clay Lake Gold target, Clontibret, and Carr-Gallus-Goran. So March, of course, last year, the joint venture was completed with Demir, and then as the year progressed, the company announced in April that it has identified 3 new gold and base metal licenses, or 3 new gold and base metal licenses have been granted in the Longford Down Massif. And of course, the Longford Down Massif is a big geological anomaly that runs across the border. Of course, no respect of any borders there at all. And 2 holes were drilled in these new license areas, and mineralization was identified in both holes. Then, as the work at Clontibret progressed, on September the 1st, and initial results were announced. New gold zones were intersected at Clontibret. 3 meters rather at 8.2 grams per ton were identified in the second hole, and then a much wider anomaly, 22 meters at 0.6% gold were identified in hole 3. So again, when you consider the initial JORC resource was established at 2 grams per ton, that's getting pretty close to the sort of levels that the company are looking for. Then on October the 8th, the company announced it had identified a 33-meter gold zone at 0.8 grams per ton. So hugely significant development there. But again, the irony is that throughout this time, the share price just appeared to drift lower. And as we've seen with so many announcements from mining companies during the year, the price is either unaffected or people, because we're almost at capitulation stage, I think, with a lot of the smaller mining companies in that sector at the moment. Investors are selling into the news and just walking away from the investment. Then we come all the way through to 2023. The Clontibret asset expanded once again to the northeast area. What the company refers to as step-out drilling identifies a further extension of the Clontibret asset to the northeast, drilled 3 holes. All 3 of those holes had mineralization. So that's a very sort of positive step. Then on February 2nd, we see a big jump in the share price. And the company announced on that day that gold loads had been intersected between Clontibret and Corcasier gold target. Significant intersection, 16.5 meters at 6.5 grams per ton. So that's well above the JORC asset I mentioned earlier. 12 meters at 4.9 grams per ton. And this is part of what is believed to be a 65-kilometer long gold trend. So it's estimated now there's some 8.8 million ounces of gold on that northeast segment alone, plus a JORC resource of 517,000 ounces at Clontibret as initially identified. So that's obviously that pushed the share price on. Then on February the 8th, further news, step out drilling planned at the Clay Lake gold target in Longford. And if you look at a map of the region, you'll see Clontibret just across the border, and then the Clay Lake near to Keady is just northeast of the Northern Ireland area border. So again, the drilling is there as part of the joint venture with Demir that I've already outlined. And then February 22nd, a few days ago, a new gold discovery announced at Longford Down Massive, 123 grams per ton of gold identified in quartz breccia sampling, and of course visible gold. This is in an area called Newtown Hamilton South, which is south of the Mines Royal asset in Keady, and of course that's in Clay Lake. Patrick Conroy said, and I think of course you interviewed him too, Mark, he said it's a potentially transformational development, and it's turned the Clay Lake and Clontibret region into a tier 1 gold district. And I think you have to applaud Patrick and his team, because they have just been out there on the ground drilling. They've been bringing up some great gold grades, but as happens, and I think you often see this when projects are drilled, you might get lucky with the first drill, then the second one misses, and then you get some average grades, and you're just trying to build up a picture of the model that's under the ground there. And what what Patrick and his team have achieved with this work is they've identified this huge anomaly that's under the ground there, which is potentially a tier 1 gold district. So obviously Demir, their joint venture partner, must be delighted, because it means that their investment will have paid off. But at the end of it, Conroy will still end up with a substantial chunk of that of that fine, which is equally important. So currently, Conroy has a market capitalization of 9.4 million, and that's after. So the share price is trading at 12.7p on 2nd of February, and it's now trading at 20.75 or 21 pence. So still has a lot further to go, and of course that's all the way down from year highs at 42p. So I think it's entirely it would be entirely appropriate that given the valuation the company now has, given what it's finding here, I think we're going to see some the Conroy share price revisit those year highs, I would imagine, in the next 4 to 6 months. But I'm sure there's an awful lot more news to come, and it must be a very exciting phase for Patrick and his team to have got the to have developed the asset this far. There's something really of great value emerging there in the middle of Ireland. Sorry, Richard. Yeah. Professor Richard Conroy. Yeah.
Oh, absolutely. Yeah. It's Richard is the chairman. Not Patrick, but Professor Richard Conroy, as he likes to. Yeah, but he. I mean, I'm surprised that the share price is where it is. Really, with the. I guess it's just, do you know what I think it might be? It could be the fact that the joint venture DEMA, people probably don't know a whole lot about them, and also that they tend to be, what I gather from interviewing Richard, is that they're quite averse doing PR. It's not in their interest. They're a private company, they're a private family actually, and coming out and sort of doing PR is not really what they want to be doing. But he's tried to emphasize a number of times just the sheer size of that group and the money that they have and what they want to do. But because it's perhaps not Newmont or Newcrest or something like that they got in bed with GGP, that's possibly a reason people aren't really appreciating the scale of this enterprise that has joined. But the market will have to cotton on at some point. I mean, Richard has been talking about bringing in one or more mines. So, I mean, he said a number of times it's this district scale deposit, but you can't go and dig up the whole of Ireland. So I think what they're doing is really looking for where they can potentially site mine sites. And, you know, these recent drilling from this new location could well be one of those mine sites. You know, if they're getting those kind of grades, do some more exploration, find if there's a concentrate of that deposit there, then that could be one of these mine heads, and you have kind of these mine heads that go on to actually get this the gold out of the ground. But I think it's an incredible. I mean, he was in disbelief when I interviewed him earlier in the week that they had these grades. He thought the decimal point was in the wrong place, actually, when he saw 123 grams per ton. I mean, that is incredible. They've got to do a bit more work to refine that and then really understand what could be there. But, I mean, that's incredible. Those are incredible grades, really. And at some point, the market will cotton on to what's there. But I'm surprised that
I think it's
the share price is lower than it was when they did this deal with the DEMA.
But I think as
sort of 35,
Jason
40
Brewer
area,
his
wasn't
team
it, if I
have shown
remember
with
correctly?
Marula,
And it's
if you get the formula right,
been
you can
quite low.
You can still deliver value to shareholders. But with companies that have been listed for a long time and perhaps haven't delivered too much over that period, I wouldn't say investors are skeptical. Well, they probably are, but I think it takes an awful long time. So when you drill and make a discovery, you've then got to assess the scale of that discovery, and then, as you rightly say, you've got to cite the mine heads. You know, where do we actually start drilling for this? How far underground can we go? You know, what problems are we going to run into? So, of course, that's when the scoping studies are crucial. That's when the pre-feasibility study, then the definitive feasibility study, which confirms the cost of doing it. And then, of course, while all this is going on, the cost of the commodity can rise, can fall, so it can add to the value of the asset or detract from the value of the asset. All of these factors. So it's very much a moving piece. So I think that's what investors have to realize, that when they're engaged with something like this, it's very much a long-term play. Of course, where Marula have that advantage is they have the producing asset of Blesberg, where they're already selling the spodumene into the market, and that will they've got a takeoff agreement. So when you're able to raise cash from selling produce from your own mine, that's a completely different ball game, because investors look at it and say, well, great, that's partly funding its own progress, so that's a much more investable proposition. Whereas, as we know, as happened with Greatland Gold, when a discovery is made, and the discovery is of a scale and size, which Conroy could be, that's when the value really explodes into life. And as you say, the joint venture with DeMere is just as significant as a joint venture with Newmont would be. But DeMere don't have the profile; they're not a listed entity, so it's harder for people to understand. But really, if you're looking for a mining or a mining project which is fully funded through to construction, Conroy's got to be the company you take a look at, because DeMere have a 3-phase agreement with Conroy that will take them all the way through to construction. And I'm sure as they continue to explore and they continue to find more, then more money will be forthcoming, because the final phase doesn't specify a sum; it just specifies whatever funding is required to take the mine to production. So that's a very important part of the equation, and certainly, I believe it's taken a long time to come to fruition, but the sort of grades that have come out of the ground with this new discovery at the Longford Down Massif is huge. So whether they call it the Newtown Hamilton discovery, I don't know, but it's in the Clay Lake region, and as you rightly said, Mark, that's already under consideration for one of the mine heads. Thank you, Mark. And Richard, apologies for calling you Patrick.
Indeed. Thank you, Alan. Thank you for giving us the case there for both Marula Mining and Conroy Gold. And we'll catch up again next week. Thank you for your time today. If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.